Earnings yield is one of the most underrated stock metrics that are actually really helpful and very powerful for you to analyze stocks effectively. In this video, I want to share with you how it is that you can use this metric so that you can find some great investment opportunities, as well as why this metric matters and how it is calculated in the first place. And if you stay until the end of the video, I'm gonna share with you a really cool way so that you can get a whole bunch of companies and get the earnings yield automatically calculated for each and every single one of those stocks. As you can see, the earnings yield percentage formula is very simple. You just need to take the earnings per share of a company and then you just need to divide that number by the current share price of that company. Now, one thing is to understand the formula and another is to be able to actually apply the formula. So let's do that using Apple as an example so that you can see this visually step by step. First things first, we're gonna need to get the data required for this calculation. For that, I'm going to be using Sheets, which is an add-on that works for Excel and Google Sheets. You can check out our channel to see how this works. So in this case, we're gonna use Apple as an example. So you just need to enter the company's ticker, and in this case, we're going to get the quarterly financials instead of the annual, and you'll see why in a second. After this, we're just gonna wait, and as you can see, you're gonna get all of the financial statements right on your spreadsheet so that you can perform any calculations. Here, what we're gonna be focusing on, of course, is the income statement. We have this income statement on a historical basis. You can see it goes back quite many quarters into the past. And what we're looking for is the TTM EPS. What this means is that we're gonna calculate the EPS on a TTM basis, which essentially means the sum of the EPS for the past 4 quarters. So if you look at here, what we're gonna do is we're gonna expand this so that you can see the numbers better. And now what we're looking for is the EPS, which you can see right here. So if we want to calculate the TTM EPS, all we need to do is sum the last 4 quarters. So we're gonna do this right now, 1, 2, 3, 4. So this would be the EPS that is most commonly used for the earnings yield calculation. You can also take the EPS for a particular year of a company, but most typically you calculate the EPS in this manner. After that, of course, all we need to do is get the share price of the company. And for that, you can use whatever source that you want, but in this case, I'm gonna be using the WISE price formula. In this case, we want to get Apple and we're looking for the price. This is the real-time price at the time that I'm recording this video. So as you can see, we're going to get the number right here. We're just going to format it in terms of price and you can see the number appears. And so now the earnings yield is going to be super easy to calculate. So we just take the TTM EPS divided by the share price of the company, and this we want to get as a percentage, because remember, the earnings yield is typically expressed as a percentage, and in this case we get a number that you can see right here is 3.58%. Now that you understand how it is that you can calculate the earnings yield, the next step is to really understand this number. And the way that you can understand this number is as follows. So first, one way to see this is as the reverse of the PE ratio. So the PE ratio tells you how many times are you paying in terms of the current net income of the company, how many times are you paying on top of that. So if the net income of a company is $100, let's just say, the PE ratio, if you have a value of 10, that means that the entire value of the company would be 1,000. So that's why right now the PE ratio would be 10. Now the reverse of that is essentially the earnings yield, which essentially tells you for every dollar that you invest in a particular company. So let's say that we have $1 that we want to invest in Apple stock. How much are we getting back, or how much is the company generating in terms of income? So right now, as it stands, for every $1 that you invest, so we'll take this $1 and then we multiply by the earnings yield. the company is producing 4 cents of net income for every dollar that you invest into the stock. Now, generally, the higher the earnings yield is, the better. And the reason why is because you're paying a lower price for that income that the company is generating. However, one thing that is very important to keep in mind is that companies that are of high quality usually have a lower earnings yield. And this is because they offer less risk as an investment. So that's just something to keep in mind. But this is why it's very important and very powerful if you can take a whole bunch of similar companies in the same sector, same industry, compare them all across a whole bunch of metrics, and one of them being the earnings yield. And that way you can see more accurately whether or not a particular earnings yield number for a company is good or not. And that's something that I'm going to show you right now. All right, so as you can see on my screen right now, I have a whole bunch of companies in the same industry. In this case, we're looking at the semiconductor industry. And here we have a whole bunch of different metrics to compare against, one of them being the earnings yield. And this number we're going to get on a TTM basis. So I'm just going to add TTM. And for this, what I'm going to do is use Y-sheets again. And there's a screener feature right here that allows you to get all the data at once. There's different ways of getting data, but this is one of the most effective for this use case. So all we need to do is select the list of tickers that we want to get data for. This works using the Yahoo Finance ticker system. The data source is different, but the ticker system is the same. So be sure to use that. Then we're going to select the parameters. We're going to click right here. And then if you click on get data, you can see very quickly we're going to get all of the data at once. Now you're looking at a whole bunch of zeros here, but don't worry, this is just based on the formatting. So we're just going to adjust this to be percentage. Maybe we want to add a couple of decimal points, and here we go. Now we have all the data that we want, including the price, the P ratio, the price to sales ratio, and this is actually based on the current stock price of the company. So this is great because at any moment, and right now the markets are open, if you click right here, you will see how the data will update as well. So this is really powerful. And now this allows you to look at a whole bunch of companies in the same industry and find some good investment opportunities. Because if you find that there's a company that has a high quality in terms of a competitive advantage and a good overall outlook for the future, and they have a higher earnings yield than another company that's maybe worse off, that can then signal to you that it is potential investment opportunity for you to consider. Now you know how to calculate the earnings yield for a particular company, but most importantly, why this metric matters and how it is that you can use it to find some good investment opportunities. If you've enjoyed this video, make sure to subscribe and turn on the notifications on, so that way you get notified every time we release a new video like this that's gonna allow you to take your investing game to the next level.